Hello, another morning with our pre-market scanner and our live charting. Not too many things happening on the scanner this morning, so we'll just quickly run through them and then maybe talk a little bit about support and resistance and why we even put these lines on the chart. So first we have INDP. We took a couple trades on this one this morning. It's the highest volume stock of the day. It's a low floater, which we like. It had some news overnight, and it's definitely reacting to it. It closed at $7 last night. We went up to almost 13 this morning, so definitely a lot of attention there. We're trading these 5-minute flag breaks. Um, we're seeing it's trailing EMA 20 sort of, so it has some support there, and then these are the levels that we established. It had a lot of selling pressure here around 12.15, so that's the first wall to break, and then the high, 12.56 or so. Those are the two key areas of resistance. He hasn't really been able to break above the second one um, during the pre-market session, which is fine. It might give us more opportunities on Bell. So on Bell, I'd be looking at either bounce on the CMA 20 line, bounce on WeWap, or break above either one of these two resistances, depending on where we are. So that's that for our INDP. Then we have IRNT, which we also traded this morning. So it's charted, but similarly has a lot of selling pressure here in this 26.8, 26.75, 26.8 area. So that's really the wall to break. Had a couple of these fake breakouts, but we were trading VWAP bounces. Looking at the chart now, it looks like this EMA 20 line is support that we can trust more than VWAP because it dips below VWAP quite a lot. So once again on Bell, I'd be looking for a bounce on EMA 20, a bounce on this 25.5, or break above this resistance. Granted, again, this resistance has been broken a couple times as a fake breakout, so support bounces are probably safer trades on this one. But we'll trade what the market gives us. And those are really the only two we were watching this morning. This one doesn't, is not really doing anything. This one, I guess, when did this pop up on scanner? Okay, just dropped news at 9 a.m. Haven't really seen it yet. These drawings are old from some other time we've traded it. So this one is obviously right now forming a 5-minute flag, so we could potentially trade a 5-minute flag break. Should be this break above 654. Same thing, it dips below VWAP a lot. Yeah, maybe even an EMA 20 bounce on the 1-minute chart. I mean, sometimes these news moves are tricky. If the news was just dropped and the stock, you know, it has this overreaction on the news and then it has some consolidation, and then we normally would trade this, like the breakout, the first 1-minute candle to make a new high, which would be this. So you trade that, and then pretty much after the first, I call it secondary move, it sort of dies for the rest of the day. So we'll see. There's not much going on today, so maybe it will have continued attention. But if you miss the original news move, then a lot of times there's just no more opportunity than those. And these are all low volume, so probably not very interesting today. This one, I would be interested in break above VWAP. I marked it here. There's a lot of resistance on 5.1, so 5.11. Break above 5.11 would be something I'd be interested in trading there. So that's really that today. Not a lot of action. the general market has been pulling back, and sometimes that could take attention away from, excuse me, small caps. Even though, so obviously the small caps are not part of the S&P 500. So the S&P 500 doesn't affect them directly in any way, which is why day trading small caps is so great, because it really doesn't matter what happens in the market. We could have a massive pullback in the general market and have a small cap um, that ran 400% on the day. So it really doesn't affect it. So you could still have great opportunities regardless of what happens in the general market. Um, but if you have a day when there's really not much going on in terms of news in the small cap world, and you have a day when the market has massively pulled back, a lot of the traders also end up just trading options on large caps, um, because they see there's not much going on in the small cap world. So we should be careful in days that are quiet. We don't want to be forcing trades. We want the trades to come to us. We just want to trade obvious things and obvious setups. And probably the most obvious stock to trade today will be this one, INDP. One of the good things that when there's not a lot of stuff happening is that there's really one stock that everyone watches. So it's easier for you to even know where the attention is that day. And if you see a setup, you can expect that most traders will see the same thing and trade the same thing, and that will give you the momentum that you want. So, you figure out in the morning, you wake up, you look at your scanner, and you see what the market's giving you for the day, and then depending on what the results are, you make your strategy for the day. So that's that. Oh yeah, we want to talk quickly about support and resistance. So we actually have a lot of support and resistance content on our YouTube channel that you guys should watch. But basically, the support and resistance is the most basic aspect of technical analysis. Technical analysis is the studying of charts. So this is what we do in day trading. We study the chart to determine areas where where supply can overtake demand, meaning there will be more buyers than sellers, and there will be and that will drive the prices to go up. Or areas where supply overtakes demand, there's more sellers than buyers, what will drive the price to go down. And we use the candlestick charts to determine those areas. So support areas are areas where we expect the prices to become low enough for there to be more buyers than sellers. And then resistance areas are areas where the prices are high enough where there's more sellers than buyers. It's an overly simplified way of saying it, but again, any market, really all it comes down to in the end is supply and demand. So you need to understand supply and demand in order to understand prices. And when you understand that, you can understand how stock prices move, right? So on this stock, obviously, we were saying we see a lot of selling pressure at 12.1. So we know that's an area of big support, of big resistance, because the the price is resisting getting above that area. So the way we use resistance in our trading is twofold. On one end, if we're already in the trade and 1210 is an area where we would already be in the trade because we're either trading this EMA bounce or a WBAP bounce or either one of these flag breaks. So if we're already in the trade, we want to take profit right before that resistance so we don't get stuck in a move down when a lot of sellers step in and a lot of short sellers step in. So we use resistances to take profit. The second part in which we use these resistances is to determine entries or adds or increase or drag our stop loss up. So what does that mean? That means that we know there's a lot of selling pressure here. If we manage to break above that level, that shows you that buyers are strong enough to really take down this wall of sellers. So that shows a lot of bullish momentum. I mean, you see the volume on this candle here that was able to break above it, right? Insane volume. That's really a short squeeze candle. You know, squeezing the short sellers above it. So now at that point, they re-entered, break below that level. They obviously drove it to the ground again. We found some buyer in VWAP, which is a natural support. We're trying to break above that level again. We can't, but at this point, the short squeeze level is the next resistance, because that's where they're going to have their stops now after entering here, and then adding here. So anyway, so we watch these levels because that gives us triggers for our entries. We don't just enter a stock because we like it or we think it's great that it's on the scanner. We want to have momentum and we want to have a trend that we follow. So we want the trend to be in our direction. So that's, that's the other reason why breaks above resistances are important for entries, because it shows that buyers are overtaking sellers. Now, another thing to note is broken resistances become support, and broken supports become resistances. So if we finally, break, so for example, here we broke above this level of 1210, and then when we went down to test it, it proved as support. We were able to push back up. Now sellers were strong. On the next test of support, we broke below it. The more support and resistance get tested, the weaker they are, because every time they get tested, we lose. So this is support, right? It got tested, buyers stepped in and bought. The next time it gets tested, there's less buyers left and less buyers left. So every test of that level is weaker than the one before it, which is why it's important, when these stocks go up, to continue to make new levels of support, so that our entry becomes safer. So if it finally does, break above this level and hold it, meaning reestablish it as support, resistance turns support, and then we drag our stop loss below that level. Then let's say it goes above this one, goes down attested, bounces, we have support confirmation, we drag our stop loss below that level, so we protect profit. And then the next time we test that level, if it fails, it stops us out for profit, and that's it. Our capital is out, our money's off the table, and we live to trade another day. So that's that for resistance. And then support. Support areas are areas where we, expect the prices to be low enough that buyers overtake sellers. And what happens there is we normally see, well, we can turn on the 1 minute chart now because it had a few support bounces on VWAP. But basically what happens is it touches that area, it gets enough buyers to move up. It touches that area, it gets enough buyers to move up. Support areas are important for reversal trades or bounce trades, where, we wait. Once we see the stock show a little weakness, we know that it needs, and we often say this, it needs a pullback to gather more strength, because we know there's going to be long buyers waiting on the lower price points. So we want it to pull back. Like, for example, here, right, we see it's been struggling with this 12.4 level. Tested it a bunch of times, tested it again, and then finally when it broke below 12.1, we know short sellers step in there. So we want it to find a big area of support so it can get enough buyers to try and break above that level again. Otherwise, if it doesn't have a big enough pullback, there's not going to be buyers stepping in, and we'll just sort of just slowly drift into oblivion. So we want to have those. We want to have those bounces. We want to have those drops to get buyers. So what we do is we look at those key areas, and then once we see buyers coming in, we take the trade, and then we trade it to resistance. And then another way that we use the support areas is obviously for our stop loss. And we can talk more about stop losses tomorrow, in terms of how to correctly place them, because it's a big point of mistake for new traders. We actually have a 25-minute video on stop losses on the YouTube channel that you guys should watch, which pretty much explains in great detail what I will run through tomorrow. But anyway, so that's the other way we use the support level for our stop loss. So that's really that for this morning. Again, not too exciting on the scanner front. We do have I have the VO chart here because we dollar cost average into VOO for our long-term investments. And this is Fibonacci. We use Fibonacci retracements and Fibonacci trend extensions to determine profit taking and re-entries. So, this area here of 416 or 417 almost was an area that we had identified as potential pullback area. It was consolidating there for a few days, which sometimes it could do and give you this false sense of, oh, but it's not dropping yet. So we had that, we had plenty of days, plenty of time to take profit, and we actually ended up taking a lot of profit, anticipating a pullback, and lo and behold, it did come. So now we have, these are the areas where we are waiting with big buy orders to potentially, buy above our dollar cost average amount so that we can take advantage of the dips. So a bunch of orders got filled here on 410, but we're still dropping. So I'm hoping we get to the next level of 406 to get some more orders filled, but otherwise, we're still adding some today. So yeah, hoping we hit this one too, which we could not, it depends. We really haven't had many big pullbacks on the S&P 500. Just these, slight corrections, which are regular and healthy, just, the way we talked about in the support and resistance lesson. These pullbacks are needed because we need to get more buyers. And so that's why it's healthy to take profit, and then we use the money from the profit to add more on dips, and continue doing that as we ride the S&P 500 up. So anyways, that's what's happening today. I'm sure our options group will be trading options on SPY. SPI is I don't really chart that one on here. Yeah, something old. SPI is what traders normally trade options on, because there's a lot of option contracts. For my dollar cost averaging, I use VO because the expense ratio is much lower, and there's enough liquidity, and there's no need for me to do SPI. But for options, people normally trade options on SPI, calls and puts. So I'm sure there's going to be a lot of that in the options room today. So that's it, you guys. We have a couple minutes to bell. I'm going to go back to the trading floor with our team. I like this one too. There's not a lot of volume, but I will add it just in case it picks up. So yeah, so hopefully, we get some interesting opportunities today. INDP is going to be my main watch. There's not much else going on. I guess this one picked up a little too. And that's it. I'll see you guys tomorrow.